Hey guys, today's October the 25th of 2022, and I want to go over the US dollar, DXY. And I wanted to show you some interesting things I'm noticing. I'm using data on a weekly chart going back all the way to November of 2006, all the way to current prices. And mind you, this is a weekly chart. And there are two important cycles right here. One is the 173, and you can see that we already hit a peak somewhere around September, the first week, and now the cycle is pointing down. The next cycle that it's important is the dominant cycle. That one hits a peak around November the 14th, and then that cycle goes down. If we do a composite, what that means is two cycles merged together. You can see that we just hit a peak pretty much this week. And you can see how price action is kind of getting a little weaker here. But let's look at the daily chart and see if we could get some better clues. Okay, so this is the daily chart, and I'm using data all the way from 2015 of June all the way to current prices right now. And this is the daily chart. And there are pretty much three that are important. I'm going to start with the strongest one and the biggest one. It's the 327. You can see that we're about to hit a peak. We're very close, pretty much this week, first week of November. The daily cycles peak on the dollar. If we take this one off and add the 123 cycle, we already peaked somewhere around the first week of October. And now the cycle is down into December. And the dominant cycle on the daily chart is 95. And this cycle peaked all the way back like in September the 19th. And we're going to hit a trough somewhere around November the 16th. So looking at the weekly and the daily, you can see that we're getting very toppy. And if price action now starts making lower highs and lower lows, that's going to give you a clue and an insight that maybe there's a potential swing high in place. Okay, so this is my US dollar chart that I use on our trading view. And you can see that we just hit a supply zone. And if you guys been following my YouTube channel, I've been saying that $113 would be the target. And we pierced it and probably maybe did 114 and change. But this month of, you could say October, we hit 113 and kind of stalled for now. Just this trend line here. Actually, I'm going to color that a different color so you guys can see it when I switch time frames. I'm going to make it yellow so it could pop and make it just a little bigger. There we go. Let's lock it. Okay, so see this trend line right here? This goes all the way back to 1985, and it pivots here, and it just goes down, and it looks like we hit it and found support. It'll be interesting to see if now we could hold and stay above it for November. But this is the monthly. You can see on the MACD, there's a weakness already kicking in. So that's a sign that maybe the cycles are taking an effect on the US dollar. If we look at the weekly, you can see that we're still on this channel. We haven't really kissed it up there, but in the Fibonacci 113 target, we've stalled here. You could say 2 weeks. We just kind of couldn't push higher, couldn't test that 114, and now closed out of the supply zone, which is 111. And this is that trend line I've been telling you about to keep an eye on. So far, we haven't had a MACD crossover yet, but you can see that the histogram here has been getting a little weaker, showing some weakness in price momentum. Looking at the daily, you can see that we made a high, came down, found support at that trend line, that yellow line I've been showing you, went up to 113 and try to go again. We kissed it on the 13th and on the 21st and failed, and now we're out of the supply zone. We may test this trend line, so keep an eye on the dollar. We've had some crossover. We had a sell signal on the 14th, actually on the 4th. So it's on the daily is sell, but the monthly, weekly is still remaining strong. So keep an eye on the dollar. I got one more chart to show you. Okay, so this is my last chart. This is my Thinkorswim platform. I wanted to show that I had a target of 113 here, pierced it. This is another trend line I'm watching here. Well, from these two pivots, this is a 2001 high and 2002 high, and we're still above it. We haven't closed below it. Next thing I want to show you is my simple glance. You can see that right now on the weekly, we have a sell signal. We haven't crossed over the mobile, this blue line. This is the that trend line. You know, we just been making, what you call it, divergence on the MACD. And now it's negative. But the trend is still up. You see as a white candle. So if you understand this system, you know that you have to be cautious here. We got a Tom D-Mark knife candle here. And this is 113 is the level I've been keeping an eye on. On a daily, you see that we, excuse me, a couple of buys, sell signals been a little more choppy, but more now on the negative. Still above the 50, the 100. Below value area high. This is going to be a strong level right here, 109, and that trend line, and also linear regression channel. This is the bottom of that channel. So this little area right here between the 50, 110, all the way to 109, that's going to be a lot of support if we pull back in there. And if it bounces, maybe that's probably going to be the area to like short when it does this bounce, but you have to be very cautious. Point of control is 106, but we're far from there. But this is what the simple glance is just teaching us here, or showing us. Mobile bands are negative, so yeah, you have to be cautious if you're going to short the dollar here. But the cycles are kind of giving you the momentum that you probably are good to go if you want to short it. But maybe you got to wait for some other things to line up. This is the midpoint chart, and you can see. On the yearly, it's still positive. There's no levels up here because this thing really shot up like a rocket. Next level is that 100 level there. But keep an eye on 111. This is the 50% from the previous month. So you keep an eye on that. That's going to be key. You can see that it's neutral. This is a strong level. It's either going to be resistance, or if it bounces above it and closes, it's going to be support. As of right now, the weekly is negative. As you can see it right here. And that level is 112. So if it bounces up here, in May 112, it might find resistance up there. And maybe stall, because you can see it's kind of choppy here. And on the daily, 112. Yep. So 112 and 112. So those are probably the area that maybe if it stalls here and it can't close, probably be a good area to short. If it closes above 112, it's probably going to retest a 113 again, and it's going to play this cat and mouse game within the cycles and all that stuff, and all the other stuff that happens in the markets, the traps and the seasonalities and everything. But I'm just showing you something simple because I don't want to, make a big video. Just keep an eye on the dollar because the cycles are really confirming some things, and price action is kind of like in line, but the market always could surprise you. Hopefully you like this video, and I'll keep you posted on my thoughts on the dollar using cycle analysis.